The U.S. economy demonstrated stronger than expected growth in the second quarter, with real GDP rising at an annualized rate of 2.8%, surpassing economists' predictions of 2.1%. This growth was driven primarily by robust consumer spending and a significant increase in inventories. Consumer activity, measured by personal consumption expenditures, rose by 2.3%, up from 1.5% in the first quarter. Both services and goods spending saw notable increases. Inventories contributed 0.82 percentage points to the overall GDP growth. However, imports surged by 6.9%, the largest quarterly increase since Q1 of 2022, which negatively impacted the GDP. Market reactions were positive, with stock futures climbing and Treasury yields falling. Joseph Brusuelas, chief economist at RSM, remarked that the composition of growth suggests the U.S. economy is experiencing a productivity boom that could lead to higher living standards through lower inflation, low unemployment, and rising real wages. On the inflation front, the Personal Consumption Expenditures Price Index, a key Federal Reserve metric, increased by 2.6% in Q2, down from 3.4% in Q1. Core PCE prices, excluding food and energy, rose by 2.9%, down from 3.7% previously. The chain-weighted price index, accounting for changes in consumer behavior, increased by 2.3%, below the expected 2.6%. Final sales to private domestic purchasers, considered a good indicator of underlying demand by the Fed, maintained a steady growth rate of 2.6%, matching Q1's performance. However, the personal savings rate continued to decline, falling to 3.5% from 3.8% in the previous quarter. Despite these positive indicators, some signs of consumer strain are emerging. The Philadelphia Federal Reserve reported that credit card balances have reached an all-time high, and banks are tightening credit standards. Retail sales, however, continue to grow, indicating resilience among consumers facing high interest rates and persistent inflation. The housing market remains under pressure, with declining sales and rising home prices stressing first-time buyers. Federal Reserve officials are expected to maintain interest rates in their upcoming meeting, with market expectations hinting at a possible rate cut in September, the first in 4 years. Recent comments from policymakers suggest a growing openness to easing monetary policy, with further rate hikes deemed unlikely. In related economic news, initial jobless claims for the week ending July 20th totaled 235,000, down 10,000 from the previous week, aligning with forecasts. Continuing claims also decreased to 1.85 million. Durable goods orders fell by 6.6% in June, but excluding transportation, new orders rose by 0.5%. Join our community of informed citizens. Subscribe to your daily dose of news and be part of the conversation.